Hey guys and girls, welcome to this week's episode of the OBS with Birchy podcast. I'm your host, Nathan Birch. This is the show unraveling the truth to the facade of the 21st century. We're now ex the Matrix and waking up to motherfucking reality. Maybe not, folks, maybe not. Talking about the Matrix, very fitting for this week's discussion being AI. Is it good? Is it bad? What could it do in the future? How does it affect you as a property investor? Can there be benefits for you as a property investor? Yeah. Let's go and take a deep dive into it. So I've got a few little notes here. Just some stats here. In 2024, 30% of companies reported to automating roles. Yeah. So I guess when we look into the future, how does it affect property? How does it affect your job? How does it affect the world that we live in? And 5 short years ago, people weren't using Teams and Zoom and stuff like that, and then we're forced into our houses. We won't go there, but we're forced into our houses, and then these things drew a lot of legs, and a lot of people don't go to commercial real estate now, offices and businesses that used to be. So there's talks now of these factories, they're called dark factories, which can work 24 hours a day. They're just purely operated via robotics, and there's no human intervention at all. The robots make everything and then give it to you. There's talks of fast food outlets that are going to turn to dark restaurants, which, hypothetically you go to a McDonald's and you rock up to the window and it's, spits out all the food because there's an assembly line at the back end, and all it takes is, maybe 1 or 2 people to man that instead of having a shop. So, how can it affect different types of properties? But then also, how can it be adapted and how are people using it when it comes to building wealth and their property portfolio? So one thing's the property getting affected. Second one, is your job going to be safe? I've got some little stats here. Estimated timeline of AI impact on job categories. If you guys are watching this on YouTube, I'll get my editor to throw this up on the screen so we can go through it together. But it's saying here between the year 2024 and the year 2030, so transport and logistics to about 2035 will be majorly impacted at that point. But over the course of up to 2030, finance and accounting jobs, education, journalism, content writing, legal and paralegal. Okay, how funny is that, right? Like someone's going to spend all their time to become a lawyer, and an AI can come in and try and, take the place of a legal representation. Retails and sales, customer service and call centers, administrative and clerical. So, is your job going to be safe? How can you shift and pivot and benefit and take advantage of, the opportunities that are out there? And how can you pivot in your own life to protect yourself? And I think it's important if, I was fortunate enough at the age of 13 to go, fuck, I don't want to work 40 years of my life in a job that I don't like. So I became motivated at 13 years old to start investing in the property. Not everyone is that young when they get, excited by it. And, if 2020 happened again, one thing showed everyone is that your job is not safe. You've been, I've been there for 30 years. I'll see you later, mate. Lost your job. You didn't take a, experiment on yourself, whatever, lost your job. So what things could occur and change in another 5 years in our life? Where could we be? What could be happening? So there's one aspect to look at. And the third one is, I guess I'm seeing a lot of, when I first started making YouTube videos, when I first started doing TV, when I started, coming out as the property guru back 16, 17 years ago in the media, there was no such thing as, to make a video. It would take me 2 days to edit a video, right? I'd have a big camera. You couldn't stream it on your phone. It was a very, very different world technology-wise. And back then, to think you could just take a video and upload it, very different world within today. But nowadays I see there was no property experts out there. There wasn't people out there talking about build a portfolio of 10, 20, 30 properties and all this sort of stuff. But now I'm seeing that there's this big wave of buyers agents and experts out there, right? And they've got my data-driven points, my AI-generated tool, my AI this, my AI data research, right? All these people talking about data, AI, all that. They're just using bits of AI, whether it be ChatGPT to spit out an algorithm for them or whatever the case may be. Then you're basically paying a buyer's agent to go and use ChatGPT and you're paying a fee. But in the instances where I've seen it being used within this industry, it's much like, I guess when you see bumper bowling, right? And you go to the bowling alley, you go to AMF or whatever, and you start doing bowling, you can get the skill and hit yourself a strike, right? Have you ever seen someone get strike in the spares just all across the screen? Bang, bang, bang. I'm not good at a lot of sports or whatever in life, but when it comes to bowling, I can throw the ball and I can get a lot of spares, a lot of strikes, a lot more than other people. And I see people then, they've got the bumper bowl, right? And they just put the guards up and everyone becomes a winner, right? And they push the ball and it hits off this wall, hits off that wall, and somehow it knocks over a couple of pins and everyone's a winner. And I'm seeing a lot of, the world changing as AI, and I just don't know exactly how it's going to be. There's good side to it, the bad side of it. Personally, myself, and this is as of 2025, I have not used any type of AI. I do not like the concept personally of using AI. Will it mean that I will never use AI? I don't know. But for the foreseeable future, I just don't trust it. I don't like it. I see a lot of people using it. I always get angry if I see a staff occasionally that's, used it on this or used it on that, because it's like, hang on a second, I can tell that it's not how I would look at something. And, we need to keep the personal aspect to it as well, and the real source of knowledge. I've got a few mates, we've got lots of mates, but I've got a few mates that, look at it, use it all the time, right? And they're constantly spitting out stuff that's AI. And some things I see is pretty cool. Some things I see, I'm like, that data is just purely based on some statistics. And to me as a property investor, for the last 22 years of buying property, I've used data in everything that I do, right? But it's finding that data that's relevant. Me as a human, I can tell you the difference between houses on the left-hand side of the street versus the houses on the right-hand side of the street. You could have 10 brand new houses on the right-hand side and 10 housing commission houses with all the windows kicked in on the left-hand side of the street. There would be a difference between the caliber of those two properties based on, whatever, and then the data would be skewed because we'd be pulling the data which would be from the same input being on the same street, and that would look like, hey, this thing's a bargain or that thing's not a bargain, or whatever the case would be. So you can use data to skew to your advantage or disadvantage, which way you want. But the problem that I see is that when people are using, I've seen, for example, business plans. People are showing me a business plan for a business idea, and I'm like, hang on a second, and saying to use data from here, there, or the next thing, but there's lots of inputs which I would think would be detrimental to that data. If it was me as a human, I'd be going over here, 1, 2, 3. I see people using it for property investing, and sure, you can pull out some old statistics and go, hey, this thing here's got good value, this thing here's X, Y, Z. But the problem is that it doesn't factor in multiple other inputs such as lending, bank requirements, the back end of the bank, how the bank works, how the tax works, and fit in from that front. You give you a bit of a loose overview of how something could work, and data, like little bit. I love when I pick up properties that are cheaper than what they were 10 years ago, right? I'm a contrarian investor, so if a contrarian investor is doing differently to what everyone else is doing, and most investors just follow the herd. And if you're just a follow the herd person, well then, you might be throwing a ball and it hits left or right, goes down the alley, and you're going to be okay. You're going to hit a strike every now and then, right? But looking at the contrarian side of me, like if I just use the Gold Coast, for example, properties in the Gold Coast used to buy for 150, 200 grand, and now selling for 600, 700 grand. They've got up quite significantly, and it's great. I see people coming into us today saying, it's very rare because our investors, if you're watching these videos and stuff, you're clued up to go, hey, that's not a good smart move. But they come in still and they're like, I want to spend $700,000, $800,000 to go buy the Gold Coast. I was like, fuck, that thing there's already got up double, triple, quadruple the value. The chance of it doubling again is very slim, but then you're only doubling it. I'd rather look at something that's cheaper than what it was 15 years ago, that the good upside worked into the same result as what has happened on the Gold Coast, because the other inputs that aren't being put in is, what are the incomes that are supporting the area? What is the cost of building? What is, like, data is always so far out of date by the time it's used. Whether there's a sale has already happened, it's gone. Whether it's, for that data, it's gone. So it's like saying, we're going to build a house for $300,000 today. It's like, okay, maybe it can pull that up, but go and find a builder that's going to survive the next 2 years to be able to build you your property. And what figure are they going to be able to charge you for that property to be built? So there's lots of variables that AI cannot predict, or, they can factor on a certain level, but they can't factor in, the real world. So just be mindful of that. So I look at it being a double-edged sword. Right? It can be used for good. There's lots of information out there that you would never have been able to get your hands onto if you didn't have access to it. There's lots of business opportunities that you could use. There's lots of tools where it could come in handy for a property investment front. Lots of things that it may not even be seen yet for another 5 years. Right? It's just the very early days in this space. So. I guess time will tell and common sense will prevail as, infrastructure gets built out, the support mechanisms around the journeys of whatever it is, whether it be in your job, whether it be in your investing, whether it be in your business. For me, I feel like I'm feeding a machine. If I was to be feeding the data into that machine, that machine would be getting the information from me. And it is pretty scary when you think about it, right? Like, you haven't seen the Terminator, go and watch the Terminator, go and look at the evil things that could be done if you had an electric car grid and, you control the chips in people's minds. And, this isn't a shout out to Elon Musk, but, when you go and look at, hey, I saw someone recently saying about a car, it was an electric car, it was an EV, it was a Tesla or something, and then they wrote, imagine seeing the car self-repossess itself, right? So someone hasn't paid the repayment, the car drives itself back. It was a robot, it was actually a robot tow truck, and it was repossessing a car, that's what it was. And someone made this comment, and it's like, you look at it, what happens if you're not in compliance with something, right? You've spoken out on your social media, you haven't had your 7th booster this month, and, it won't let you drive more than 15 minutes out from where your house is, so you can't go anywhere, so you're trapped by movement. It has the potential to be very evil. And, for me, I'm not trusting Go, right? So I look at that data, I'm like, that looks like a risk. I don't want to put it into my equation. So as an investor, as a business person, it's not something that I see adapting to my world as it is today. So another part, I guess, where AI can become a trap is where it becomes a crutch, right? Like, we're using phones today, right? Where you go out to a restaurant and you look at kids, and I've identified this recently. You see kids that are crazy wild, right? But they don't have the devices attached to them. You're seeing these kids like, right? They're in the corner with the iPad. No offense to anyone that's parenting with an iPad, right? But it's like that iPad is controlling your child, the vision, the mindset, the content they're consuming, and the programming of how they will be raised. So, just looking at, the crutch that we fall into, how do you want to, if you want to be so dependent on it, well, then you become dependent on that system, and then you're at a risk to that system, and you don't have the critical free thinking that you would have had prior to that. So just be mindful of, being too reliant on it, because otherwise you become too dumb and your device will become smarter than you. I guess looking at, does the AI, if you're taking advice from AI, does it understand the specifics, the dynamics of your life, right? Like, you could go, like, I'm just making up some stuff. 40-year-old dude, single, not single, kids, no kids, all those data points that get put into the system. And then does that understand what the bank system is up to? Because let me tell you, right, the policy changes at the bank every week. Every bank is different, and it changes at the back of the bank every single week. And when you look at property prices, and I see stuff like Townsville, right? Last year I was buying a Townsville for $150,000. There we go, yeah, cool. AI's told me I should go buy 5 properties in Townsville. Well, Townsville now is $350,000 entry point for the same little shitbox that was selling beforehand. So does that factor in how the lending is going to work? Does it factor in all those other data inputs, which can't really be shared from that front? So I guess, how can you adapt it? How can you use it? Be mindful of it. The jobs, the people, not just your job, but the jobs of the properties, the people that are living in your property, right? Are you an area where everyone's a factory worker? Are they going to lose their jobs in the future? Are you living in an area, is the property that you're buying going to be negatively impacted from that? Will there be a social claim that's happening in the region near you because of the way that business is conducted in the future with the impact of AI? I've seen these trucks that they now have like a forklift, and they say that these trucks will be self-driving. They can drive 1,000 miles or some shit, and that there's a forklift every 1,000 miles. You take the battery out of the truck, they swap it like a using a forklift. What is the infrastructure is going to be needed for different levels of AI? So, I guess what things can you do to protect yourself from being fragile and being, too reliant on it? Build skills, understand the world that's here before AI, because once AI comes, you can very easily fall into the crutch. Remember the world without the technology that we have today. Remember the world without having a mobile phone. Remember the world without having the internet at your fingertips. Remember the world, I look at technology. And I think about the technology. We all think that we're in a very advanced civilization that we do today, right? But we can't do half the things that were done, or even we can't even understand how the buildings were built 500 years ago or 1,000 years ago, right? So how come the architecture was there? How come things were different, right? We don't have that knowledge. When I look at a fridge, a simple thing as a fridge, right? I've got a smart fridge. It's got like a little iPad in the screen, right? Whatever. The fridges that I've seen, I've done a lot of research in the fridges, are just random, right? But the fridges that were built from the 1960s and the 1950s, they're all much more advanced than the fridges that we have today. The types of designs that are in there, the movement, how the fridge was set up. But now we've got fridges that are on mass production lines and that last a year, 2 years, 3 years, 5 years, and that's all that it is. So you're looking at, I guess, to protect yourself, be strong in the world without AI, because if you can be strong without AI and use AI as a bit of an accessory, that's cool. But if you become dependent on AI, you're weak and AI is stronger than you. So just be mindful of that. And I guess if you look at the visual breakdown of the wealth pyramid of 2025, up the top of the little chart here, AI tools and digital leverage. There's no chance that I could get messages out of. I was actually at the gym last night, and Duke came up to me and he goes, "Nathan, I can't believe I've seen you at the gym. Retired my wife, blah, blah, blah. I've been watching you for 15 years. I've bought some properties. It was humble to see, right? And to listen to his story. And, but if I was doing what I do in the 1990s, I would have had to have put an ad in a newspaper. I would have had to have got everyone to come in to have a seminar to discuss a little bit of content. And all that time that's lost, you can just watch this at your fingertips. You can listen to me while you're on the treadmill. You can listen to me while you're on the train. So it's having those abilities, right? And those resources that you never had beforehand, like Google Maps. You don't have to fly everywhere, right? You've got internet. You can go and find and connect with people, right? So the digital leverage is very important. How to build, side hustles and scalable income is another part of it in the middle. And I guess the base of all of it is having your wealth in, real hardcore assets, whether that be, a physical form of something like a gold or silver or land or whatnot. For me, property is my favorite. I like property because they can leverage it. We've got to rebuild what you've got. Inflation is playing its key. We've got migration coming in, putting pressure on the existing infrastructure. You've got the cash flow that gets pushed up with inflation, and you've got the capital base position that gets pushed up with it. So for me, it doesn't matter what happens, as long as I've got the people that need to have a roof over their head, I've got a custom-made base there throughout my rental property. So, I guess in a bit of a recap, just looking at, AI, is it your friend? Is it your enemy? For me, I look at it as it can be a useful tool, and I say it can because I don't use it. I see people using it, so it's not like I'm dumb and I don't understand how it works. I understand how it works, but I'm not reliant upon it. And I think that's where a lot of people become dumb, because they become reliant upon it. And it's the only way they can operate is by having that. It's like, the only way you can mathematically equate something because you've got a calculator. It's not that you can't figure it out in your head like a calculator. So it takes that skill set away. The intuition, the local market knowledge that I was talking about, you don't have that in AI. You don't have the understanding of processes, policies, other changes, other risks. There's so many other risks that are just the data input plug-in. It can be good as a crutch. It can be good as a starting base point. But at the same time, if you have the wrong foundations, this is probably the most risky and the scariest part. It's a profit invest using AI. If you don't have, think about this, there's an image. Maybe I can get the editor to throw this on the screen as an image, right? But an image of a brick wall, right? And you just lay all the bottom bricks. And there's a piece of art, and it had like a book underneath the brick wall. They laid a brick wall, but they put a book underneath. And by the top of the brick wall, the whole thing was just a shamble at the top, but it was because the foundations weren't laid right, yeah? And I guess if you don't have your bases laid right with the right foundations, you're just going to be building stuff on shitty foundations. And all that I've seen at this point when it comes to AI and property investing and any of these gimmicky type of things, everyone's sucked into AI. It's like pets.com back in the early 2000s, the late 1990s. It was like, it was a big tech bubble, schemy bust that happened. And from the back of it, there was some significant, architecture and infrastructure that we use today in the tech space. But if the foundations are wrong, and 99% of stuff I've seen coming from AI is gimmicky and would be wrong, it's not a really good base to build from. So get the base right. If you're going to do something right and then add AI on, add AI later on after you've got the foundation, after you've got the base established, because then you know what you're looking for. And that would be my tip of advice. If you want help with a real human and you want to connect with people that are doing it, you can reach out to me and my team. You're not talking to a robot on the phone. You're talking to real investors that are investing currently in the market, and you want to have strategy from real people, not using AI, reach out to us, 1300-367-925, admin@B.Invested.com.au, or click on the links in the screen wherever it is and book in a discovery session. Thanks for watching. Make sure to like and subscribe and share with your friends every Thursday. Google Play, Apple Play, Spotify, and YouTube. Bye for now.
Like Bilal said, man, we're stuck in the matrix. This my advice, don't care if you take it.